Have you ever wondered if structuring your portfolio the way that FedEx, Amazon, and UPS structure their delivery trucks makes any sense at all? Check out this episode of Wealth on the Move, the podcast, where I talk with Greg Allison from Orion Direct Indexing on how they are helping folks structure their portfolios just like that to help them save in capital gains taxes and continue to have their wealth moving for them. Your life journey doesn't stand still, and neither should your wealth. Welcome to Wealth on the Move, the podcast. Welcome back to another episode of Wealth on the Move, the podcast. I'm your host, Will Hoffman, founder and president of Hoffman Wealth Management. We're going to talk today about some solutions. We talk a lot about some problems and some things you could maybe get yourself into trouble with, but we want to talk about solutions. And today's guest, Greg Allison from Orion Custom Indexing, is going to help us with some solutions when it comes to what to do with highly concentrated stock positions, business owners that are maybe selling a business for a large capital gain amount, especially real estate investors. I think this is a great solution for. But it's something that is gaining in popularity called custom indexing. And before I get too deep into it, I do want to introduce our guest, Greg Allison from Orion. Greg, how are you today, man?
Doing great, Will. Thanks for having me. Happy to be here.
Thanks for joining us. Greg is a senior investment consultant with Orion Custom Indexing. Greg, before we get into this, can you tell us a little bit about what you do, what Orion does, what you do with Orion, and a little bit about maybe your education and background?
Yeah, sure thing. So I'll start with Orion. So Orion broadly, we work with RIAs and financial advisors all over the country. So we're happy to partner with 17 of the 20 largest RIAs in the country and many smaller shops as well. First and foremost, I'd say we are a technology provider. So we have kind of two parts of our business, really. Orion Technology, and then we have Orion Wealth Management as well. So we do some wealth management. We have a turnkey asset management platform business here as well. So we are many parts of an advisor's business kind of across the landscape and dependent upon how advisors like to utilize our services. What I do here inside of Orion is I work specifically on the custom indexing team. So as you mentioned, I'm a senior investment consultant. So I sit somewhere between our business development folks and our portfolio managers. And so I will interface with folks like yourself alongside of our business development team to really get the story out there around Orion Custom Indexing. And then I'll get involved a little bit more on case by case specifics, get a little more granular on how to set things up and how to best position specific client accounts so that we're ultimately trending towards what the client's looking for.
Okay. And you're a Tar Heel, right? If I remember.
I am. Yeah.
So
UNC, class of 13.
Nice.
Yes.
So we want to talk specifically about what custom indexing is and how individuals can use this to their advantage. So first, give us an idea of what custom indexing is, because this may be a bit more of an academic discussion than strategy, but I promise you're going to find some solutions in here that may or may not make sense for you, but they will make sense for somebody that you know. So give us a little bit of a history of what custom indexing is and a definition.
Yeah. So, custom indexing, folks listening, you may have heard of direct indexing. You may have heard of personalized indexing. Different companies call it different things. Here at Orion, we call it custom indexing, but it's just, a slightly different flavor of kind of the same idea. And when I think about custom indexing, I think about the functionality as kind of a 4-step process. And so the larger idea is that instead of owning a pooled vehicle like a mutual fund or an ETF to get exposure to an index like the S&P 500 that we're all familiar with, we're actually going to go in and buy the underlying positions or a subset of the underlying positions inside of that index. So functionality, kind of a 4-step process. You pick your exposure. And to keep things simple here, we'll just say the S&P 500 because, Again, that's something everyone's familiar with. It doesn't have to be an index, doesn't have to be the S&P 500, but that's step one. And so now that we know what we're trying to invest in, step 2 is unwrapping that exposure. And so if we're going to buy that S&P 500 exposure for a client, like I said, you might decide to do that through an ETF or a mutual fund. But what we're going to do is rather than buy one product that represents the entire index, we're going to buy the components of that index and more specifically a subset of that index. So rather than having one ticker that might be an ETF, we're going to buy some NVIDIA, we're going to buy some Apple, some Google, some Amazon, some Meta, all the other names that make up that index in a way
Okay.
where you don't need to buy all 500 names in the index. So we're going to buy the most important parts of it, okay, to approximate the risk and return of that index. So that's step two. And then once we've unwrapped it, step three is customizing it. And that's where custom indexing comes into play. And
Okay.
that's kind of the fun part as well. So customization, that could mean tax loss harvesting on behalf of your client, tax transition, getting client from point A to point B. Maybe there's some exclusions around ESG or socially responsible investing that your client wants to put in place. Maybe there's certain stocks or sectors you want excluded or highlighted. And then fourth is now we manage it. So we monitor daily for ongoing tax loss harvesting opportunities. We're going to rebalance quarterly, and generally our PM team is going to make sure things are operating the way they're meant to operate.
Okay. So I'm going to try to give us a Cliff Notes version.
Yeah.
Instead of buying a S&P 500 ETF, you guys are going to go buy, and you can own all 500 names if you wanted to, but you're going to buy a lot of the components of the index and then manage them based on what the client's goals are, whether it is to minimize capital gains, to help offset capital gains, to try to offset, maybe potentially a concentrated holding somewhere else, for somebody that maybe works for one of the companies on the S&P 500 and is paid in RSUs. They may not want any more exposure to their company, but want the rest of the index to help do that. So that's, our model at Hoffman Wealth Management is wealth strategies that revolve around you. And this is really a specific strategy that revolves around what the client's end goal is, whether it's, like you mentioned, tax loss harvesting or ESG or diversification. Am I understanding that correctly?
Absolutely. Yeah. So there's any number of levers we can pull from a customization standpoint. And then to your point about purchasing a subset of the underlying stocks, in our large cap core model, we would purchase somewhere around 150 names. So, not even close to the 500 that represent the S&P 500. But that gives us a good basket of stocks to then go out and purchase when there are tax loss harvesting opportunities. And we are selling some of those underlying holdings. We've got a big universe of stocks to go buy from and replace those with.
Okay. So, and for our listeners, tax loss harvesting, we're especially the time of year that we're in and the market year that we've had, tax loss harvesting can be kind of a robust conversation because we've had some nice run-ups and, perhaps for some reason you want to sell something for a gain. Sometimes folks will sell something that at a loss to offset that gain so their tax bill isn't as high when their taxes come due next year. So they will do some tax loss harvesting, and tax loss harvesting could probably be another show in itself. But what direct indexing can do is do that throughout the year, not just in November, and look at those components throughout the year and harvest those losses, and then make sure you're able to realize those losses from a time standpoint. Am I right, Greg?
Yeah, absolutely. Yeah,
Okay.
and what that results in is, versus a pooled vehicle like an ETF is, maybe the two strategies have very similar gross performance, but because you're offsetting losses with gains elsewhere in a strategy like custom indexing, our after-tax performance ends up being looking a little bit better typically, and we provide the client with some tax alpha.
Okay. Tax alpha is a great phrase. And I have to chuckle. I don't know if you remember the scene in the movie The Wolf of Wall Street where Shia LaBeouf is walking with his mentor, and his mentor is starting to become overwhelmed with the profession. He's, matured into an old man, and the market is moving wildly. It's kind of the lead up to the financial crisis. He's complaining about his partners and the other analysts saying, well, we're making money on the losses. And it sounds like a bizarre phrase. We're making money on the losses. Help us understand what they mean there, because that is kind of an oxymoron or something that's counterintuitive to be able to use losses to help you profit, and maybe give us an idea of how that worked and give
Yeah.
a year in which that worked.
Yeah. Yeah. So great question. So we actually we have some pieces that speak to this, and one of them highlights the Russell 3000. So an all cap index that represents a big portion of the U.S. stock market.
Right.
And in 2024, the Russell 3000 was up around 24%. So I'm sure a lot of your clients had some really great gains in 2024 across their portfolios. The Russell 3000 specifically was up around 24%. So if you owned an ETF that tracked the Russell 3000, you'd have one line item on your statement that showed somewhere around a 24% gain, and that's fantastic.
Yes.
But if you owned some of the underlying components like you would inside of a custom indexing strategy, inside of the Russell 3000 that year, there were somewhere around 1,500 names that ended the year positive and somewhere around 1,200 that ended the year negative. And so what we can do with those negative stocks is look for opportunities when the price on those stocks is below what you bought it for. And we can lock in that loss, and then we can offset gains in our risers. So on the other side of that, you've got stocks in your portfolio that are at a price higher than what you paid for them. So we're going to offset the losses with the gains, which is a perfectly acceptable thing to do
Right.
from a tax standpoint. And then we have the same gross return. So our return in the custom indexing portfolio is going to be, ideally very similar to that ETF, that pooled vehicle. But because we've been able to offset some losses in the losers with gains in the winners, the after-tax return is ultimately going to be a bit higher for the client.
Right. And those losses, and this may be getting more into tax prep and accounting, but those losses don't always get used in that year. They can get banked for future years if you don't use all of those losses. You can carry them forward.
Yeah, exactly. So $3,000 can be applied towards ordinary income to offset ordinary income, which is great. And then you kind of touched on this. From a business owner standpoint, a real estate investor standpoint, we actually have the ability inside of Orion Custom Indexing to turn on a feature called losses only. And so we'll just accrue losses for you over each successive calendar year, and you can roll those losses forward as long as you need to. And if you've got a business owner client or you've got a real estate investor client who knows they're going to be realizing a capital gain of some significant size somewhere down the road, we can turn that on now. And then when that capital gain is realized in the future, we can use those banked up losses to offset the capital gain and mitigate the tax impact a little bit for them.
Right. And then the one area where, especially with the robust amount of people that are retiring right now, are folks retiring that have accumulated huge amounts of company stock and maybe head into retirement with an over allocation of that company stock. And unwinding that can be very expensive, especially if they've been planning to be in a lower tax bracket. We know that that's not always the case, and they've banked these gains, or they have these huge run-ups, especially in a year like 2025, the market keeps touching all-time highs as we're moving. Having those losses can help offset those gains and liquidating those company stocks and then reallocating.
Yeah, absolutely. So yeah, if you have some pent up losses somewhere in your portfolio and you've got a big position in your company stock, and we see that a lot.
Yeah.
You can absolutely use those losses to offset gains. Now, the other thing you can do is, 88% of our custom indexing accounts here at Orion are funded with securities. So it's not that investors are just giving us $1 million in cash and saying, go ahead and invest for me. They're actually bringing over securities that they've owned for, in a lot of cases, a very long time, that, to your point, have decent pent-up capital gains there that they want us to thoughtfully and tax consciously unwind for them. And so clients will bring over, Microsoft, for example, because they've been employed by Microsoft for a very long time. And you can actually give us a capital gains budget on a year-by-year basis. And you could say, hey, Orion, my client has $1 million portfolio and 500,000 of it is Microsoft. And, there's $500,000 in unrealized gains here. If we sold everything right away, we'd be on the hook for a pretty big tax bill. We don't want to realize 500,000 in gains right now in order to transition to a more diversified portfolio, but we are okay realizing 50,000 in gains, for instance. And so then our technology and our algorithm will manage to that $50,000 gain that you're comfortable with, and we'll incrementally diversify that concentrated position for you with that $50,000 gain budget in mind.
And that's on a streaming basis. That's not just happening, when you sit down for your client review. You're doing that
Yes.
January through December, all year. When there's an opportune time, you can do that because, if we take a year like 2025, for example, April was kind of a rocky month.
Yeah.
The tariffs were headlining every evening on the news. Every financial website and outlet were scaring us about tariffs. We were scared about tariffs. We didn't have any idea what was going to happen. The market was showing some weakness, and here we are in November, floating around all-time highs. So executing that strategy in April is benefiting you now as we approach the end of the year. Am I assuming that correctly?
Yeah, absolutely. And so, that's one of the benefits of Orion Custom Indexing is we are reviewing every account across our system daily for tax loss harvesting opportunities. So it doesn't mean we have opportunities daily, but we're looking to see every single day if we look lot by lot, and we're looking for either a 3% decline or a $250 total decline on the lot level, and that'll send up a flag for our system and say, hey, we've got an opportunity here to realize a loss. And so so April was a great opportunity for that. And the nice part about the tax loss harvesting is we're not just selling that and staying out of the market until we can buy back into that same security. Our system's going to look for a different stock that either approximates the same kind of risk characteristics of the one we just sold, or a stock that when we buy it, it gets us closer to the index that we ultimately are looking to track.
Okay.
So we'll be invested in the market still.
And the thing is, those opportunities happen every year. I mean, there's rarely a year that does not have a pullback at some point. I mean, I've been doing this for 23 years, and it's rare that there's a straight up year every month, every day. It just doesn't happen. So those opportunities exist, but as a financial advisor whose finger is on the button of their client's money, we can't execute this strategy on our own. We would love to. We don't have the resources. We don't have the technology. We don't have the time. So we have to partner with folks like Orion that can execute this and have built the technology for us. But it's not something that makes sense for everybody. I want to make sure I'm very clear about that. This is a strategy that makes no sense in an IRA. Correct, Greg?
Well, typically I would say you're correct. About 8% of our accounts are in qualified account types.
Oh, wow.
And so the reason for that, typically, like I said, non-qualified makes the most sense generally because of the tax impact and the tax mitigation. But the 8% of qualified accounts we see will be utilizing one of two things, either personalization or customization. So personalization from maybe an ESG standpoint, an SRI standpoint, a faith-based standpoint, where they want to get, they love the S&P 500, but maybe they don't want exposure to certain types of companies that derive revenue from, animal testing, for instance,
Okay.
right? So we can
Understood.
exclude those types of companies and many others. The other thing would be, hey, I've got my IRA here, but outside of my IRA, I've got $2 million in Microsoft stock, to go back to our Microsoft example. So
Sure.
I want you to manage my IRA, tracking the Russell 3000, but I want to specifically exclude Microsoft. And so we can do that, at a reasonable price point where we're taking into account the client's ticker level preferences there.
And other than traditional non-qualified or non-IRA accounts, where do you guys see this being deployed? I mean, I immediately think of real estate investors. They're always chasing the next property because of the 1031 exchange rules.
Yeah.
And they want to buy more real estate. They're comfortable with real estate. They understand real estate. They know you can see, feel, and touch it. And there's nothing wrong with that. However, they're constantly pushing capital gains down the road that are going to be realized at some point. So this is something that can complement their building or property strategies. Am I correct?
Yeah, absolutely. So, It gets back to the point we made earlier about, business owners realizing a capital gain at some point in the future. Real estate investors, same thing. You've got the 1031 exchange available to you as a real estate investor. And so ultimately, if you decide to sell a property and not utilize a 1031 exchange, there's a good potential for some capital gains realization.
Right.
So we could offset that eventual realization with losses that we're accruing now. And so that's something that for your real estate investor clients, they'd want to be discussing that with you a number of years ahead of time. The other thing, though, is that even with a 1031 exchange, and I did a little digging on the 1031s just to refresh myself, but there's sometimes some leakage even when you transact with a 1031 exchange, and I believe they call it boot, and the boot will there'll be a taxable impact there. So it's important to think about. And then the other thing I'd say is that from an exclusionary standpoint, we can exclude specific tickers, or we can say, hey, I want Apple in here, but only between 3% and 5%. So there's a lot of levers we can pull, but one of the neat levers we can pull is on a sector level. So for your real estate investors who ultimately decide to invest with Orion Custom Indexing, we could completely exclude real estate sector stocks. So that's kind of a checkbox that we can tick off, since they're already exposed to so much physical real estate. Maybe they don't want to double up that exposure in their custom indexing account.
So you can add additional diversification in addition to giving them the tax loss harvesting that can help with that.
Exactly.
What are some other instances where you've seen success with this beyond, because there's no 1031 exchange rule for stocks.
Yeah.
You can't sell Apple, buy Microsoft within 180 days, and the IRS is saying, oh, okay, we'll wait. But are there some other examples where you've seen this mechanism work that we may not be thinking of?
Yeah. I mean, we discussed tax transitioning. That's really our biggest use case. Like I said, 88% of our accounts are funded with securities. And, some level after the last 15 years or so in the market.
When you say that, let's say they have that run up in Microsoft. They're bringing their Microsoft shares to you.
Yes.
And then you're deploying this strategy, selling losses and diversifying away from the big holding.
Yeah, exactly right. So right off the bat, they'll see a big chunk of Microsoft in their Orion Custom Indexing account, and over time, we'll whittle that position down and get closer to the index that you want to track. So tax transitioning, concentrated positions, sale of a business, sale of a real estate holding. You've got the values-based screening, ESG. The other thing, though, would be charitable giving. So there will in every account, there will be certain positions or certain lots that are at a very low basis. And if you were to sell them, there would be a decent sized tax impact, right? Because our cost basis is so much lower than that day's current value. And so one thing you can do is for your clients who are already charitably inclined, they can identify specific holdings that they want to donate to their charity of choice. And then as opposed to donating cash to that specific charity. And so what they can do then, they donate that stock to the charity. They get a tax write-off. They replenish their custom indexing account with the cash that they otherwise would have sent to the charity. And we can then use that cash to buy new securities at a higher cost basis, which then gives us more and more opportunity for tax loss harvesting. So it's really a win-win-win. The charity gets a donation, the client gets a tax write-off, and the client gets to replenish with cash. So we can go out and buy securities at a higher basis.
How tuned in do you need to be with each individual's tax situation or tax returns? Do you guys monitor those so that you know what's been carried forward?
So from a carry forward standpoint, we'll end of the year, we'll let you know, hey, for this calendar year, here's the losses that have been accrued. But we are not actually tabulating, the combined carry forward losses. So that would ultimately fall on you, the client, CPA, to kind of keep tabs on that.
And then do we just let you know, hey, there's 20,000 in losses we can use in addition to what's going on in this strategy for the next year. If we see some run-ups, please feel free to take advantage.
Yeah, and that goes back to the capital gains budget that I mentioned, where you communicate that to us on a calendar year basis. And yeah, you would factor in that, hey, my client's got some losses in another account somewhere that we're going to use potentially to offset some gains you take here. So, maybe we'll give Orion a slightly higher gain budget, given the fact that we've got losses elsewhere.
Okay. Is this a new strategy? This
So
is, I know that it seems like every other article or every other publication we are getting as advisors is highlighting this in some way, shape, or form. But how did this strategy emerge on such a, because again, this is a very detailed strategy
yeah.
that requires consistent monitoring. How did this strategy emerge? When did it emerge? And how has it grown in popularity?
Yeah. So you mentioned earlier, this probably isn't something that a single advisor or even a small team of advisors could do for an entire client base, right? And it used to be reserved really for the ultra wealthy and family office level clients where, family level net worth was, tens of millions or hundreds of millions of dollars.
Right. And their accountant was in the same office as their trader.
Right, exactly. Because it was such a manual process. Now, in the last 10 years or so, we've got fractional share trading. We've got zero or very low fee trading going on. And we've got the technology behind strategies like this that allow us to implement these things, on a much wider scale. And so there is technology underlying our strategy, Orion Custom Indexing, and it's called optimization technology. And without getting too granular, it's kind of similar to the technology that maybe Amazon or FedEx uses to plan their delivery routes and to be as efficient as possible with deliveries. To your point around the manual process, when we have to make one decision, well, we only have one decision to make, and that's the decision. But when you have two decisions to make, or three decisions to make, the combination of different decisions you can make becomes exponentially larger and larger. And so by the time you have 10 or 14 or 15 decisions to make, the combination of decisions starts to grow into the billions, right? So you start to get very exponential very quickly. And so it's simply not something that humans can do, right? We'd have to monitor daily for tax loss harvesting opportunities. And then once we
decision fatigue is the phrase that our psychologists and mental health experts will say weighs us down, right?
Yeah. So, not only once we found a loss harvesting opportunity, we take it, but then what do we replace it with that best approximates the risk and return of what we just sold?
And that's the technology that Amazon or FedEx is using when they have to decide order of deliveries, how to stack the truck to make sure that everything is, because in addition to it being in the order it needs to come out of the truck, the appropriate order may not be beneficial to your stuff breaking.
Absolutely.
If the first thing out of the truck is a new set of barbells, you can't put that on top of some fine china that's the last thing out of the truck.
That's a great point. Yeah.
So you have multiple decisions that need to be made and in a instant, because that truck needs to be loaded on the road, or it's not making anybody any money. It's not getting anybody their stuff. And that's what they're in the business of doing. So you guys have been able to apply that technology to a stock portfolio.
Exactly right. Yeah. Okay. And that's a great example. I'll probably steal that from you going forward.
It's all yours, man.
Yeah.
Just make sure when you use it, you reference the Wealth on the Move, the podcast. We got to boost some listenership here. Get some subscriber, get our subscriber metrics up. So we've talked a lot about this. What haven't I asked you about direct indexing that I should have, that somebody sitting at home listening right now is saying, I wonder if this is a strategy that I could or should be using?
Yeah. So, I mean, we've covered high level kind of what it is, how it works, who can benefit from it. What I'd say is for folks that, where this conversation has piqued their interest, give us an opportunity to run a proposal, right? Work with Will. Will can work with our team, because the capabilities and how this technology might interact with your specific portfolio could be different from how it would interact with any other client's portfolio. So we want the opportunity to kind of show you how we can benefit from a management and tax savings standpoint. The other thing I would say is that one benefit of being an Orion client, having your account inside of Orion, is that this custom indexing technology is native to Orion, and so we can kind of look at the entire household when we're doing tax loss harvesting, and that's something that some of our competitors can't do. So we know what stocks are held elsewhere in the household. when they were purchased, and so we can kind of navigate around some tax hurdles from that standpoint by having all of that data inside of Orion.
Again, it's so important. There's two metrics that I keep thinking of that are making this so valuable. One is just the price of the market right now. We've had some pretty healthy returns over the last few years, and God willing, they continue. But we have some gains that we may want to realize, but that is an expensive process. The IRS wants their part of your good decision making or your advisor's good decision making. In addition to that, longevity is playing into this, because a lot of folks would have just said, "Oh, okay, but when those pass to my kids, they'll get the step up in basis." But we're living so much longer that we keep kicking that down the road. And at what point does the stock end up dropping to where it wasn't beneficial to wait anymore? Do you see that as part of this conversation, the longevity component? I don't. Maybe I'm out of base here, but it seems like it's a great reason to consider this, because we may not be able to just give our kids step up in gains at the right time.
I used to work for a firm called Hartford Funds, and they did a lot of work with the MIT Age Lab. So I don't know if you've come across them.
I followed their stuff a ton. What was their phrase? Who's gonna something about ice cream?
I know exactly. Yeah, there's how are you going to change a light bulb? How are you going to get an ice cream cone? Right?
Yes, that was the longevity questions.
Yeah, and so they deal with longevity a lot. So I'll borrow this, and I hope I'm getting this stat right, but from memory, if you've got a couple today that they're both 65, there's a greater than 50% chance that one of them lives to age 95. I believe is the stat. You'll want to double check me on that. But to your point, longevity is more and more of a factor that we need to take into account. And so, yes, non-qualified assets, inheritors would receive that step up in basis upon the owner's passing. But we need to think about today diversification, because just a few years ago we saw a lot of these names that are at the top of the market now, your Nvidia, your Microsoft, your Amazons, get cut in half almost in 2022 or more. So we need to be thinking about diversification from that standpoint. Well, if we look at the ratio of the S&P 500 over the equal weight S&P 500, that ratio is very high, pretty much at an all-time high relative to the last 15 years. So concentration is a concern. We want to get our assets to the next generation. If that's part of the plan, hey, we're gonna have some kind of inheritance in place. Well, we want the most inheritance as possible. Sure. So we don't want to take on that concentration risk necessarily.
Right, because the step up in basis is nice, but if it's a step up in basis of half of what it was before, again, it was a fool's errand to try to just wait from a tax standpoint. Greg, where can our listeners find you, follow what Orion's doing here? I know we share a lot of things from Orion. You guys seem to be thought leaders in a lot of areas. With Dr. Crosby, who was a previous guest. Yeah. He's the chief behavioral officer?
You got it.
That's what they call him. We had Naomi Wynn, one of Dr. Crosby's colleagues, talking about behavior. And now where can folks follow all of these things that Orion is doing?
Yeah. So, follow Orion on LinkedIn for a broad overview, orion.com on the web, or if you wanted to get specific on custom indexing, orion.com/custom indexing. And then for all of your listeners out there who are currently clients or may become clients, I would say, get with Will. My team is always happy to jump on a call with one of your clients, Will, to kind of go through the process, explain, kind of what's going on here, and explain to them specifically what their account might look like depending on what they're funding with. So we're always happy to jump in and be in the mix with you there.
Well, it's truly, the two phrases we use a lot. The first is wealth strategy revolving around you. And there's nothing more revolving around you and your portfolio than a custom indexing strategy for you and your situation. And the other thing we always say is keep your wealth moving. And this is doing that and keeping your wealth moving so that it can benefit everything you're doing. So I'm glad you could join us today, Greg. I'm glad we could talk about this strategy because it fits exactly into what we're doing for our clients and what we'd love to do for our listeners. So if you want to follow us, hoffmanwealth.com is a great place to find us. I'm very active on LinkedIn under Will Hoffman. And remember, until next time, please keep your wealth moving.
Gregory Allison, and Orion Portfolio. Solutions are not affiliated with Hoffman Wealth Management and Private Advisor Group.
Will Hoffman offers investment advice through Private Advisor Group, which is a federally registered investment advisor. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult with the appropriate qualified professional prior to making a decision.